In my business career, there has been only one moment in which I can say that I was actually horrified. Sinking feeling in your stomach, dry mouth, cold sweat, horrified. At the time, I was working on a sales support desk in the home office of a national insurance company brokerage firm. And one of the financial advisors called in to the phone queue and got me. The company had several thousand advisors, so I had never spoken with this person before, and he starts explaining a situation he had. A client had sold his business to his son, and the financial advisor assisted them with the transaction. They had set up a buyout with payments over a number of years, and then the business had purchased a life insurance contract on the son, so that if anything happened during the buyout, there would be funds to complete the transaction. Now, this was relatively early in my career, so I didn't have a ton of experience in this kind of thing. So I conferenced in one of the advanced markets specialists on my team, and eventually she got the financial advisor to cough up the detail that was at the heart of this problem. The life insurance was structured incorrectly. The daughter-in-law, who was, of course, the person who had inherited the business, was also the beneficiary and owner of the life insurance policy, not the father. The widow ended up with both the business and the life insurance death benefit. She had no interest in the company, so the business that the dad had spent his whole life building was going to be left to go bankrupt. She was going to walk away with the cash, and he was going to get nothing. Now, you might think to yourself, well, that's bad, but horrifying. At the very end of the call, the financial advisor told us that it was his brother that had died. He had inadvertently made his sister-in-law rich at the expense of his father's life's work. Now, this story graphically illustrates why even a financial advisor needs experienced people with whom to consult when they are assisting clients with selling a business. And luckily for us, we have just the man to talk about this very topic joining us this week. Welcome to episode 52 of the Valuability Podcast, How to Sell a Business Part 1 with special guest Mike Anderson. The Valuability Podcast is for anyone interested in financial planning, business leadership, and personal development. Whether you are a financial professional, business owner, individual investor, or employee, we believe that financial success comes from creating a plan on the foundation of your values, and building your ability will get you there. My name is Danforth Fleek. I am joined each week by my co-host, friend, and mentor, Philip Simonson. We have been in the financial services for 20 and 40 years, respectively, both as financial advisors and in a wide range of roles on the wholesale and retail sides of the business. And as I mentioned, we are joined by Mike Anderson, the former president of Ameritrade and currently the managing director of Bridgepoint Investment Banking. I will give your contact information out at the end of the first portion here today, Mike, but tell us a little bit about your transition from the financial planning world into what you're doing currently.
Yeah, thank you so much, Danforth, for the introduction. And Philip, is always good to see you. We had the opportunity to work together for a couple of years when we were in a support role for the work that Philip and his team did. And really, as I think about the transition, I've been in financial services. I was with Ameritrade for 10 years. I was with another firm, Securities America, for 5, so 15 of my years have been there. I also, once upon a time, owned a business brokerage firm. So I became a certified business intermediary. It gave me an opportunity to learn a lot more about the business of selling businesses. And what attracted me to this firm now, Bridgepoint Investment Banking, was it was more than just selling businesses. It's really counseling owners, and it gives us the opportunity to also source or raise capital for people. So it's not just about a transaction. And that's really been helpful for me, because even at my ripe old age, it gave me a chance to learn a lot more about the world of finance, even though I'd been at it for 15 years.
Now, before we jump into the meat of our discussion, I just want to let folks know that Mike is going to be referencing a PowerPoint. You can find that if you're not out driving or running or somewhere where it's not safe for you to reference it. You can find that on our website at value-ability.com under the content tab. Just scroll down to episode 52 and we will post a link there. There is a button that says jump to documents, and you want to click on that because it's kind of at the bottom of that page. So click on that link and then it'll be right at the top of that section under episode 52. So Mike, tell us a little bit more about Bridgepoint. I know last week we teased with the concept that investment banking involves neither investing nor banking, which I find endlessly amusing.
Well, I said that because it is a bit of an odd term. Investment. I know for the financial advisors listening, you hear that and you immediately go, "Oh, this guy's competition. I don't want to work with him." And it couldn't be further from the truth. The banking side of it is I am not a bank. I work with banks. And so investment banking has always struck me as kind of an odd term as well. The investment side of it is we get involved in transactions, we get involved in capital sourcing. And so you can argue that there is investment involved in that as well as banking, because it's not uncommon for us to run a process for a business owner. And at the end of the day, we affiliate them with an institutional bank or a large regional bank. And so we are sourcing capital. So hence the name investment banking. But it does kind of crack me up personally. It's always been kind of a funny term for what we do.
But it's really more of a consultant role.
Yeah, Danforth, you referenced a second ago the specialist aspect. I had the good fortune to have a knee replaced a year ago. And when you think about it, I went to my family doctor, and I'm sure somewhere in medical school he could have learned how to do a knee replacement. But fortunately for me, he had already had his knee replaced, and he sent me to the specialist that did his knee. So when you think about it, financial advisors, God love them, because they do a lot of great work. They do hand holding, they make decisions on investments, they provide tax advice, etc. The one area where they would rarely have much experience, and certainly not day-to-day activity, is selling a business or sourcing capital. So we're specialists. It's all we do all day long. And really the value prop for that financial advisor and for that business is we become, pardon the phrase, an agent. We work as an agent on behalf of that business owner, on behalf of the financial advisor. And during the course of this conversation, if it's okay, I'll tell a couple of stories. One of my all-time favorites is a very successful $200 million a year business man who went to his financial advisor, or a buddy of his, I think, and said, "Hey, I have to sell my business." And the financial advisor said, "Why?" He said, "I don't have a mechanism to pass my business down to my daughters, and the bank won't loan me any more money." And I'm not picking on banks because we work with them every day. Mm-hmm. But the banker, because it was extremely asset light, said, "You've maxed out your line of credit. I can't loan you any more money based upon our regulations and restrictions on banking law." So the financial advisor said, "Well, hey, before you do that, let's talk to Matt." Now, Matt's the founder of our company, Matt Plooster, a small town guy, played football for a year at Nebraska. Ended up at University of Chicago, economics, finance, really, really bright. I think he might have been a math major too. So he learned the capital markets in New York and in Chicago, and then moved back to this little town. And he took a look at it and he said, "Oh, we can recapitalize your firm." Well, how does that work? And that's not something a financial advisor does. They don't recapitalize firms, right? So we ran a process, sourced capital, were able to secure $45 million for him. He took a personal dividend, and this is pre-COVID, so the rules, the guidance, the industry was a little different then. But he took a personal dividend and was able to work with the financial advisor, the lawyer, the CPA, etc., bought out minority owners, was able to set up the business so that should he pass, and he was a heavy smoker, the business would automatically go to his daughters. Now, on his own, could the financial advisor have done that? No. He brought in us. We're specialists. We helped him figure it out, but it was in partnership with the CPA, the lawyer, the financial advisor to make it happen for them. So what role does an investment banker play? We really partner with financial advisors, and we act as agents on behalf of that business owner when they need a specialist.
It's very good. And a great example too. Mike, you hear these terms and can you help clarify them for me, private equity, investment banker. Can you describe those and just bring some clarity in what, how you fit in?
Absolutely. And I appreciate the question. If anybody's following along, and hopefully there are, if you go to slide 9, I talk about funding sources. And it's not a full definition, but at a high level, investment banker, again, acts as an agent on behalf of the business owner to either find funding from bank lenders or non-bank funders. And the reason I call attention to it is if you look at it, I built kind of what I call the tower or the flow of funding for business owners. Typically, they'll start out with founder, family, and friends. They go to an angel investor. Everybody's heard that term, right? And an angel investor is non-family usually, well, pretty much always. But they have a limit to the amount of money they'll put in. And then here's where your real question starts, which is venture capital. So what is venture capital versus private equity versus investment banker? And Lord knows people use those terms synonymously, and that's not the case. Venture capital really is someone who's more of a risk taker. They're typically focused on technology or the medical field, and they will pick a number, $1 to $7.5, $10 million into a business and take that risk. So I did a chart one time and it said venture capital, their goal is to bet on one winner out of 10 so that the upside offsets the downside on 9 deals. And that's kind of what a venture capital does. Those are the ones that make the headlines in the paper, right? When you read about some firm that just sold for $1 billion and it started out 3 years ago in technology, and somebody put in, $5 million and boom, there it is. Those are venture capital. Private equity, which is someone that I work with on a regular basis, is a firm who's looking for an established business, an operating company. They have real revenue. They have real EBITDA. They are, invested in their business. It's typically been around for many years, again, with the exception maybe of technology or some healthcare. And they're looking for, frankly, an investment where they can multiply the revenue, multiply the profitability, multiply the growth, and build that business up candidly with the plan to sell it in 5 to 7 years. Venture capital have a little different time frame. And investment bankers, we don't invest in any businesses. We don't write a check. We're not in conflict. We're always acting on the same side of the table as that business owner or that financial advisor. And our goal, frankly, is to run a process to create as much interest and demand as possible and truly competition between the people looking to invest and or buy that business. So we can maximize the value for that business owner.
I've always thought of these three. I've heard you explain these before in the past, but just now as you were going through that, I kind of thought of, investment banking is essentially a financial planner. The private equity is kind of a captive agent. They're going to sell you their own stuff.
Yep.
And the venture capitalists are the day traders. They're the ones out there trying to buy GameStop and make the 10 baggers.
I'm going to write that down because that's a really good way to put it. No, that really is. That's a good way to put it. Again, private equity, no offense, because I work with them every day. Their goal is real simple. It's called buy low, sell high. Right. So now you're in the financial advisor world, in as much as when they come in and look at a business, their goal is to pay as little as possible. And then in 5 years, sell it for the most they can. Now, I recently sold a business to a private equity firm because it was a good exit. Some of all the owners rolled some money into the next investment with the goal of having, quote, a second bite of the apple. And in some cases, that second check is bigger than the first, but it does change the dynamic. And I want to be sure I get this across too. Private equity will take ownership in your company. And venture capital will definitely take ownership because they're taking all the risks. So there are a lot of people out there, and you guys have seen it and heard it too, where the owner, if anybody watches Shark Tank.
I was just
Yeah. Oh, yeah.
mental telepathy.
Yep. Shark Tank. So, for $300,000, I'll give you 5% of my business. No, not how it works. I got bad news for you. That's not how it works. We did do a deal, and it's turned into a great deal for a couple of a management buyout. Two guys wanted to buy a company. They went about it a little bit funny. They put the offer in without having finance lined up, and that put a crunch on us. But we partnered up, and we found them a partner to go in with. And over time, they can own more of the business. But out of the chute, they might have owned 10 or 15% of the business. If you don't have the money, you can't own the business. It's real simple that way.
Mike, that's excellent description of the investment banker, private equity, and venture capital. And now, how about in the area of sources of capital? Can you take us through, because you got bank funding from community banks to the big institutional banks that we all have heard of, to non-bank funding, and how do you work in this area?
Yeah, and thank you for that, Philip. So, in the world I grew up in, and I think many people, when you start a business, and I've owned a couple of small businesses. Where do you go for money? Well, you go to the bank, right? And you know a guy who you met at coffee who knows a guy, and you go to the banker and you get capital. And my hat's off to community bankers because they are the bread and butter of funding for businesses, right? And then sometimes the business is wildly successful. And because of lending limits, you have to move up the stream, if you will, and you go to a regional bank, and then maybe you get even bigger. And now you have to go to a institutional and a money center bank or a national bank. What I learned when I got over here, and again, I sold businesses and run big businesses, and I didn't know candidly that non-bank funding existed. So what exactly, and again, I'm on slide 9 for anyone following along, what exactly is non-bank funding? Well, I have a couple of examples. People are starting to hear a lot more about family offices. It's their money. They don't have to abide by FDIC and bank lending limits, et cetera. But the private equity world has really gotten into debt funds. And I don't have it on the slide per se as debt fund, but a private equity, a friend of mine in Chicago, their fund raised $1.2 billion. Well, this will sound funny. It's really hard to spend $1.2 billion. And so what they did was they carved out $350 million, set it to the side, and said, this is now a debt fund, meaning when they invest in a company, they do not take any ownership in that company. So think jumbo loans. Mm-hmm. And really that's how I view it is jumbo loan on a business. Yeah, it's probably going to be at 9%. But here's the beauty of it. We did one not too long ago where instead of a 5 or 7 year amortization, right? If you were to refi your house and you had a choice, you could do 15, 20, or 30 year notes, mortgage. You figure out cash flow and you say, okay, I will go with 30 year because I want to minimize my monthly cash flow. Well, businesses with non-bank funding have an opportunity to extend that amortization as well. And I know it'll sound funny, but we lined one up pre-COVID. We can still get pretty good amortizations, but with a 100-year amortization table, interest only. So when you think about the impact on cash flow, and in this particular case, it was a transportation company, a trucking company. They had 3 commercial banks and 11 leasing companies they were dealing with. And they were trying to renegotiate their notes at the commercial banks and couldn't because none of the banks would budge. And so, no offense to the banks, we took all of them out, plus the leasing companies, gave them one lender with a 100-year amortization on a $60 million revolver. So
Very nice.
non-bank funding can really come in handy when you need more flexible terms. And again, love banks, work with them all day long, but they have so many regulations, right? Not their fault. They're a regulated industry. And you guys have lived in regulated industries where one has to be careful how that all works. But so non-bank funding exists. And if there was one thing you asked once upon a time, what's the one thing you've learned by becoming an investment banker? I know that sounds odd. It's the world of non-bank funding. I just didn't know it existed. And I would say a lot of my conversations with business owners, with financial advisors, is about options. I love options, not necessarily the options market, but I love options when I'm trying to make a decision, right? And the fact that this exists really opens up opportunities and for business owners and for financial advisors.
Well, and as you said as well, in the banking industry, you're stuck within the relationships that you personally have. Every business owner that I've ever dealt with has a couple of bank relationships, but when you get outside of that, people don't know you. And I've tried contacting banks, and 1 out of 3 got back to me. But every business owner has that same story, and I hear it constantly of, well,
Sure.
I go to this guy because I know them, they know me, they understand my business, and then either that banker goes away, or something happens, and then they're kind of stuck. Business owners don't spend time building a network of bankers with a bunch of relationships.
Really, really valid comment, because again, they started a small business. They had a banker that they grew to, either that banker grew with them or they went to another bank. They can't spend time. They're busy. They're running a business. I mean, they have a day job. My only job is to source funding for them, either banking or non-banking. And again, we reach out to Bank of America, BMO, a lot of the big banks on a daily basis. So it gives us an opportunity to create the relationship that they just don't have a need or time for.
What do you find, Mike, is the typical reasons for the companies to need extra sourcing or extra dollars? And how can and financial advisors, so if they're working with their clients, hey, here's a heads up I'd give you.
Yep. Gosh, Philip, thanks. I've got a ton of answers for that one, but the largest single reason right now for many businesses, it's growth capital. The second, I'm going to rattle off a couple because it's really driven by the family. It's difficult for me to answer because everything we do is goal oriented.
Mm-hmm.
You and I have spoken once upon a time around the 3 C's, I called it, capital, control, and continuity, right? So capital comes in a lot of different flavors. And I've told people, I feel like I'm the Baskin Robbins of capital, because you have to tell me what you want before I can serve it to you. And so if you say, hey.
And which flavor?
Yeah, exactly, Mike.
What size?
Yep. Mike, boy, that's a good one. Yeah. What I really need, because my wife said I got to buy a house in Naples, Florida, is I need about $5 million in personal liquidity. Now, my son wants to grow the business, and he spotted a competitor we want to buy that's probably going to be $25 million. Could you line me up with $30 million? Okay. Mm-hmm. Yeah, well, let's talk about it. So when you ask the question, what's the single most common theme? I don't know if I have that yet, but it's usually around capital, and it's also sometimes debt restructure. So the trucking firm I was talking about a minute ago, that was totally debt restructure. He was at an impasse with 3 banks. Had nothing to do with growth, although we lined up more of a revolver than he ever needed so that he could grow. So now he has the opportunity to, quote, write a check on his line of credit at the bank to buy a competitor. That's a pretty significant opportunity. But it's really about that capital need, and I don't. I'm biased, as you might imagine, towards our firm. We spend a lot of time on our core values, and one of them is honesty and integrity, and really focusing on the needs of that business owner. In fact, I won't go through all of our core values. They're in the deck if somebody wants to look at them. But just this morning, it's slide 4 if you're looking. One of the things that happened this morning was we won a contract with a very significant company. It will be somewhere between $50 and $75 million. And we got a phone call, and the guy said, hey, we're talking to a couple, this is a CFO of a very big company. We're talking to a couple of investment bankers. In the next 48 hours, will you send us your engagement agreement? And we said, no. I said, what? We don't know what your goals are. We don't know what your core values are. We don't know if we want to work with you. And they put their pencils down with every other investment banker and stopped the process and met with us, and over a 2-week period decided to go with us. Now, am I biased? Yes, but it would have been pretty easy for us to email an engagement agreement and said, giddy up, let's go. But we didn't know what they wanted to accomplish. So for us, again, it's largely 3 C's, but capital comes in 42 flavors. I don't know what you need or what you want it for. And I don't know, frankly, if you can afford it or you have the capitalization ability for what you really want to accomplish. Did I answer your question?
Yeah, it's very good. As you said, primarily growth purposes, but I also liked how you segued into the core values, particularly, for a lot of our, we've got a lot of listeners out there, from financial advisors to business owners. That lesson just there you provided, look, if you got to determine, do they meet your ideal client criteria? What are they, in looking at that, what are their goals? What are their values? Do we match up? And let's get that right first before we go any further.
Yeah.
And unless you have that courage, one of those other C's,
Yep.
to say, hey, put the brakes on here. I gotta, it really says, very loudly, look, this relationship comes first, not the money.
Last Tuesday, I had a conversation, again, CFO of a good-sized company in Kansas City. And I ended up the call with what we commonly refer to in our company at Bridgepoint with dad advice. And I said, his name's Tim. I said, Tim, I'm going to give you a little dad advice. You're not ready. I can't take you to market. You will not see the benefit you're looking for. What? He said, most investment banks would want to take the fee and run. I said, I know, but your owners will be disappointed with the results because you're not ready. And here's the 4 things you need to do. Now, I can't spend all day doing coaching, every business, but
Right.
but I do enjoy the education side of it, and I'm happy to give dad advice. And I told him to, let's talk again in 3 months. I think it's more important for us. Again, one of our core values is purpose driven, and there is maybe I'm odd. Well, my wife would say I might be pretty odd, but I have an altruistic side. There's an altruistic side to this, which I'll tell you a quick story. So we had a business a few years ago that came to us at what I might call the 11th hour. They had gotten an unsolicited offer for just a distribution business of roofing supplies. Nothing sexy about it, right? They're selling shingles. And they'd gotten an unsolicited offer, and they took it to the lawyer and said, is this a good offer? He said, what do I know about it? I don't know if that's a good offer, right? So we called a timeout. We ran a process. We created our favorite thing called competitive tension between a couple of bidders.
Mm-hmm.
And the offer was 6 times EBITDA. We said, probably could do better. Ran a process. The original bidder came back and said, okay, 8.3. We said, congratulations, you've gotten second. What? Well, yeah, congratulations, you're second. They came back at, I think it was 9.2 or 9.3. So now this is the company who offered 6 times and paid 9.3. The altruistic side of me says just what we created family wealth for generations by getting a 50% bonus on top of what they thought was frankly a pretty good offer. So if there's a sense for what's fun for us as a firm, what's fun for me, it's seeing that family benefiting from their life's work.
Hard work.
Yeah, Danforth, you opened with the story, and that wasn't scripted, by the way, for anybody listening. That I didn't know that story, but if you think about it, right, it's now we're back to the knee replacement. My family practice doctor could have opened me up and hammered away and probably put a new knee in, but that's not what he does every day, and this is what we do every day.
Mm-hmm.
Well, and that's the analogy that financial advisors use almost universally, is that I'm the general practitioner. When we arrive at a place where I need a specialist, I call in a specialist, whether that's an insurance wholesaler or an advanced markets person. You really fill almost exactly the same role from that standpoint. Now, in those relationships, however, financial advisors understand a little bit more in terms of they've gotten the education in terms of, how do I start this conversation? How do I get into this discussion? And so your role, like you said, is very similar. I always thought from a wholesaling standpoint that my role was education first,
Yep.
right? I got to teach you how to have this conversation. And so many advisors know this, right? Instinctively, that, hey, I've got this gold mine of business owners and they just don't know how to tap it. And this is a way that they can really not only tap it for their own interests, but for the benefit, as you said, of their client and their client's children ad infinitum into the future.
Right.
So that, talk a little bit more about that process in terms of how the financial advisor gets into it,
Yep.
gets into that with you, and then what they see on the back end.
Yeah, you bet. Thanks. Again, when Philip and I worked together roughly 5 years ago, over a 5-year period, I used to also recruit financial advisors, so have spent a lot of time with them. And when I think about a financial advisor's world, the business that owner has is probably the largest single asset that owner has. And I vividly remember a conversation since I've been with Bridgepoint, working with a financial advisor. And I said, how large is that business? And his reaction was, gosh, I don't know. And I thought, now that's criminal. He doesn't know what the revenue or the profitability is of that business. So he has no idea how to value that and build that into that holistic plan. So I guess, Danforth, what I would say is, maybe the segue for a financial advisor to their client is simply to say, Bob or Sally, I'd like to sit down and learn more about your business. Tell me more about the revenue, the growth, the client base, et cetera. And I'd like to learn a little bit more about it. And I know a guy, right? That's the joke. I know a guy.
Yes, I know a guy.
Know a guy, right? No, sorry, being a little flippant there. But the answer is, I know a specialist in this space who could help us value that business, give you a sense for the worth, and potentially guide us through the process to the ultimate sale, which, again, doesn't have to end in a sale, except every business owner will someday sell or leave their business. And you can figure out how that happens. I don't care if you live to be 95.
Right.
You're going to transition out of the business someday.
Or they're going to want to get some money off the table, take some chips off as they age.
Yep, personal liquidity. So again, Danforth, what I would say is have a candid conversation with your client and say, I need to learn more about your business if they don't already know. And if they do know a lot about it, Bob or Sally, business owner, we need to make sure that this is part of your holistic financial plan, your estate plan. I need to know more about what your intentions are someday. And I know a specialist who would be able to help us establish, I'll call it a benchmark, a high water mark for what the business is worth in today's market. Now, I throw in, today's market simply because March 6th of 2020 was different from March 6th of 2021, right? And so valuations do change. And just like the financial advisor's dilemma, how do you time the market? And people don't think about it that way, but there is a high and there is a low. And we track industries daily. And I can trend and track where those businesses are. And sometimes we say, you might wait 6 months. And sometimes we say, sell in the next 6 months. You guys have probably heard we have a new administration. And my guess is taxes may be on sale this year. We don't know exactly.
I think that's a fair assessment.
Yeah, we don't know. And I'm not trying to be political. I'm just saying, oddly enough, taxes sometimes go up. And Danforth, I want to come back to something else you asked or said a second ago is Philip, I think once upon a time you and I had a conversation about that old radio station.
Yes, we did.
WIIFM. What's in it for me? That's an old, I've always liked that one. The old radio station.
WIFME.
What's in it for me? I view this opportunity again. Let's say that business owners got a good manufacturing, and these are very rough terms, so don't hold me to this. But I'm looking at a manufacturing firm, and based upon quote everything I've seen, they're going to trade or sell somewhere between 6 and 8 times EBITDA. So we sell it, it's 5 million EBITDA. We sell it for 7 times, that's 35 million. They buy the house in Naples, and now your net is $30 million for the investment advisor, financial advisor. Well, if you can pick up 75 basis points, you just got a $150,000 a year raise. So what's in it for them? I view it as AUM. Assets under management. It gets you to continue to build your book. And if you're running 100 million or 60 million, a $30 million bump would probably be a pretty good bump for you.
Well, and to be clear, you are not in any way interested in managing the assets of the business owners, which is, again, looking at it from a financial advisor's standpoint. They say, well, if I just don't mess with it, then I'm not going to mess up this client, except that, as you said, either by death or by sale, that's going to happen at some point. And if it's not you, it's somebody else.
And let me just end that someone else. If it ends up someone else out there on Wall Street, and all of a sudden, let's work a deal with you. If you let me help you sell your business, and by the way, we have this advisory services over here as well. We can manage the proceeds from it, and I'm sure, Mike, you can expound on that, and you probably see that.
No, in spades. And I have it's a legit live story. When I first started with Bridgepoint 4.5 years ago, I had personal contacts with over 300 or 400 financial advisors. I ran a division where we worked intimately with about 150 advisors. And then I had a whole bunch that I also knew. And one of them was in Des Moines. And so I called this guy up and I said, hey, do you have any business owners you're working with? Here's what I do. Yeah, actually, I do have one. Well, great. Well, let's make the introduction. So Danforth, now I'm back to your question. How do you make that introduction, right? And I'm not sure, and again, I get it. They don't want to screw up the relationship, right? So I call him back about 3 or 4 months later. And did you want to visit any more about that business owner? Long pause. Bill, what happened? A guy with one of those big named Goldman Sachs from Chicago flew in and sold the business and took the account. Oh, really? Because you didn't want to broach the subject, and now you've lost the entire account. I mean, and it's a true story. I mean, I
Right.
can't give you old Bill's real name, but it's a shame. So if you're uncomfortable having the conversation, call me. We'll visit about it. But I'll even script out a couple of introductions. I did that with an insurance guy in Kansas City. No lie, true story. I could even dig up the email if you wanted to see it, but he said, I'm not sure how to introduce you. And so I typed up 3 or 4 scenarios, shot it to him. And then 3 weeks later on my trip to Kansas City, sat down with the business owner.
And it goes back to what we were discussing just earlier on with your knee surgery. Again, I always see the financial advisor always is one of those generalization terms, but a financial advisor or financial planner, they're the GP in the financial world. They're the generalist. One of your key roles is to bring in that specialist, such as yourself, to talk about this legacy planning, the state tax planning, and the holistic approaches you said.
Yep. Yeah, and I'm not going to cover all the tax issues. I'm not going to cover all the legal issues. I'm going to cover running a process, creating competitive tension, and maximizing the value. That's what I do. And frankly, usually walk away. Now, I'm on my 3rd transaction with a firm in Kansas City. I sourced non-bank funding for him, bought a business for him in another country, and now we're in a 3rd process with him. So I sometimes do have longer relationships, but in some cases I'm one and done.
What I also, and you've alluded, Mike, you and I've known each other now for 7+ years, and that organization we worked for, I always joke, and there's always a little truth behind every joke. Best thing that came out of that organization for me was knowing you
I
and
appreciate
that relationship. And what I can tell our listeners with hands down, and then also, go to the PowerPoint, and the first thing, Mike's core values, it's about integrity, it's about honesty, and then to go down a few more, it's about respect. And what I learned earlier on, and this is where I see many people in this industry get it wrong, you respect people and you use money. And a lot of the people in the industry will flip flop that. And that's when they get in trouble. And your example of being able to, hey, no, that you're not ready. That's
Yeah.
to sell. That takes courage, and it's the right thing to do.
Yeah, and there is a slide in the deck, slide 11, that talks about business valuation drivers. And if you look at that, that's a starting point. So Danforth, maybe here's the segue for that financial advisor is some of the items in that top box. Again, Bob or Sally, what are your revenue trends? How concentrated are you with clients? Just ask a few general questions to learn about the business. Are you comfortable with your management team behind you? You use those as ways to start the conversation. I'm going to dig in a long ways before I would get to a project with them, but that's a good place for them to start that conversation.
And Mike, in great transition phrases there
Yeah,
and examples that you provided. If I'm sitting back, whether I'm as a listener here and I'm an owner of a business or I'm a financial advisor, what what's your ideal candidate criteria? Before I pick up the phone and
sure.
dial, we're
Yep.
gonna. So can you tell us a little bit more about that? And is it manufacturing only, etc.?
No. Yeah, great question. So, sweet spot. What's that sweet spot look like for
Mm-hmm.
us? What's down the fairway if you're a golfer? For starters, again, it's operating companies, firms that are alive and well and been at it for a few years. We prefer firms with EBITDA of $5 million and more. So these are not insignificant. I had one business whose top line revenue was 32 million, but their EBITDA was 8. So some are wildly profitable. I also have a business we looked at was $150 million. I kid you not, and EBITDA was 3. So it's hard to go off of revenue sometimes, but think 50 million and above, but it could be 32 and be wildly profitable. Industry agnostic, but love trucking, logistics, distribution, transportation. I've done a couple deals in IT services. Love manufacturing. Working 3 projects in manufacturing right now. We have another specialist in our office, a peer of mine, who's really going to town on healthcare, doing extremely well. Another guy 2 doors down that does staffing. We've got a gentleman in our Lincoln office who's on the Nebraska Trucking Association board, so we're very heavy in trucking and logistics. But when you're in the Midwest, manufacturing is good. There's a fair amount of IT, a lot of healthcare. So I'll take a look at most industries. If I'm not good at it, we'll let you know. And in fact, last Friday, I handed off an oil and gas business to another investment banker. We don't do that very often, but I don't do oil and gas, so I gave it to somebody else.
Now, we have a lot of listeners internationally as well. Would this be an opportunity for them, or do you partner up with others, and or is this just domestic?
Yeah, we work with businesses that are based or have divisions in the United States. That said, I interacted multiple times with a firm in France that owned a company in the United States and wanted to buy another company in the United States. So I have to be a little careful with international. But again, my company in Kansas City, we bought a firm in Mexico City for them. So we will do some international work as well.
Thank you.
Yep.
Awesome. Well, I think that's a great spot for us to transition for the week. We've kind of gotten into the section in between financial advisors and business owners. Next week, we want to get a little bit more into the business owner side of things. So we're going to invite Mike back and have him chat with us more about that side of things. So whether you're a business owner or a financial advisor, obviously, if you're a business owner, you'd be interested. If you're a financial advisor, you want to know more about how to have that conversation, what things are going to be said to educate yourself. Check back next week. I want to give Mike's contact information. If you have any questions for him, want to reach out to him, his email is m.anderson@bridgepointib.com. And of course, the website is bridgepointib. That's indiaboy.com. And then his cell phone, if you want to give him a shout, is 402-290-6611. Again, that's 402-290-6611. Mike, we're going to let you go for this week, but thanks so much for joining us, and we will check back with you next week.
Yep, really appreciate it, gentlemen. Enjoyed the conversation. Thanks.
Thank you, Mike.
And that is going to wrap up our episode for this week. If you have topics that you would like us to cover or questions for us, you can email us at info@value-ability.com. Again, that's info@value-ability.com. Or you can find our social media links, Twitter, Instagram, and Facebook links are all at value-ability.com under the Contact Us tab. Wherever you find your podcasts, Apple Podcasts, Spotify, Amazon Music, please like, review, subscribe, and share. And subscribing, if you are a regular listener and have not yet subscribed, is the best thing you can do for us. We also have a YouTube channel. Search Value-Ability on YouTube to find us there. Lastly, you can find us on our website, value-ability.com, under the episodes tab. All of our episodes are in the episode player. Next episode, as we mentioned, episode 53, How to Sell a Business, Part 2. Mike Anderson is going to be coming back and speaking specifically about the aspects of selling a business relevant to the business owner. So whether you're a financial advisor or a business owner, come on back next week to hear more about that side of our topic. What questions do you have for Mike about selling a business? We record these on Mondays. If you're listening to this over the weekend, reach out to us and let us know what questions you specifically have for Mike, and we will ask him in next episode. As always, thank you for listening. Be sure to join us next week. And remember that financial success comes from creating a plan on the foundation of your values, and building your ability will get you there. This is a podcast collaboration, not a peer-reviewed journal or a sponsored publication. We make no representations as to accuracy, completeness, correctness, suitability, or validity of any information in this podcast, and will not be liable for any errors, omissions, or delays in this information, or any losses, injuries, or damages arising from its display or use. All information is provided on an as-is basis. It is the listener's responsibility to verify their own facts. You should be aware of the real risk of loss in following any strategy or investment discussed on this podcast. Strategies or investments discussed may fluctuate in price or value. Investors may get back less than invested. Investments or strategies mentioned on this podcast may not be suitable for you. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You must make an independent decision regarding investments or strategies mentioned on this podcast. Before acting on information on this podcast, you should consider whether it is suitable for your particular circumstances and strongly consider seeking advice from your own financial or investment advisor. The views and opinions expressed on this podcast are those of the authors and do not necessarily reflect the official policy or position of any other agency, organization, employer, or company. Assumptions are not reflective of the position of any entity other than the authors, and since we are critically thinking human beings, these views are always subject to change, revision, and rethinking at any time. Please do not hold us to them in perpetuity.